Start Financial Content Leader, and here I'm going to be giving some lowdown summary of recent news that's happened, looking at some of the upcoming events, important events this week, and also looking at a few charts. And we will have plenty of time also at the end to answer any and all of your questions. So thanks for joining us. And I would like to invite you at the start to say, can you hear okay? Is the screen also clear? Are you having any issues? And also let us know where you're joining from. It'd be great to know where you're joining from. And in the meantime, I would also remind you before we start that this stream is for informational purposes only. It's not a recommendation to trade. It's not a recommendation to do anything. It's not investment or trading advice. You always need to manage risk and do your own research. So let's start by looking at Exness's client area. In the personal area, Exness, which is we can see on the screen here, I would remind you here is that we're trading on a demo account, not doing any live trading and not with real money either. This is a demo account, and anything that's being shown on the platform is purely for informational purposes. It's not a recommendation to trade. Please remember it's a demo account, and everything that I'm saying here is just my personal opinion. It's not the opinion of Exness or of anybody else. So if we go to the left tab in the personal area from Exness under Analytics, we can see firstly Analyst Views. So if we click on this button here, Analyst Views, then we can get a summary of Trading Central's opinion about various different instruments. Mostly it'll be major forex pairs, but it also does cover commodities. Sometimes it covers crypto as well. So if we click on one as an example, here we've got dollar loonie. We can see that Trading Central thinks the price is going to go up with the target around 136.7. And it gives also the alternative scenario, what might happen if the price actually moves in the opposite direction and goes down instead. So this is a potentially useful tool that you can use directly from Exness's personal area. You can use it for your research, use it to help you to build ideas, but of course not a good idea to rely exclusively on this to make your trades. They're not meant to be signals, they're just meant to be views and opinions. And you can also see under the Analytics tab, Market News, which from FX Street gives you various longer articles about most of the major instruments, from oil, forex majors, crypto, gold, various other things. Gives you some of the summary of what's recently happened, a reaction to some major news for various different instruments. So this is something that you can use as a feed to get information on the latest news. And also under here, the third sub-tab that we have under Analytics is Exness's economic calendar. So if we click on economic calendar, that takes us to the calendar, which has recently been revamped. And we can filter it by the time zone, which period we want to look at, which countries, levels of importance, and that gives us various different options to see what are the major events that are coming up. So it's a significant improvement on the previous economic calendar. Also has charts comparing previous and expected results. So a big improvement on the Exness's economic calendar recently. That's a very good thing. So today what we're going to be doing is looking a bit at some important events that have happened recently. We're going to be looking at some events that are coming up, analysing a few charts. But I would just stress, if you do have any questions about anything, whether it's about something specific you want to be analysed, it might be a general question about trading or about strategy or something like that, please by all means go ahead and ask the question. If you have a question about payments or something else, you can ask it, but I'm not sure I'm going to be able to get you the right answer since this is not my area. And also, this is not what the stream is about. The stream is primarily about trading and about markets and analysis. We're not primarily talking about payments. But I mean, of course, you can ask pretty much any question you want within reason. We will certainly try to get it answered at some point during the stream. We should have plenty of time at the end to answer any remaining questions. So we have Joyce. Welcome back, Ms. Joyce. Joyce says, hello, Michael, streaming from Nairobi, Kenya, one of our regular viewers. Joyce, thanks for tuning in again. Hope you're well. Kenny Kapandula says, Zambia. Welcome, Kenny. Oban Godgreat says no sound. I am not sure. I think it might be best, Oban, just to turn the volume up a little bit, because on my end it seems to be working fine. For the time being, I could turn this up slightly. Can I? Yeah, slightly. Yeah. So it seems to be working fine here. I think maybe just turn your volume up a little bit. Mr. Oben, I think it was, who said that. Right, so Caroline Gold says Bitcoin 4 times. So yes, we will certainly look at Bitcoin. We can actually do that at the beginning if you would like. And then we can move on to the fundamental part. Since that is a burning question, talk about Bitcoin. Yes, we will do that. We will talk about Bitcoin. And also Rohit M says how to deposit crypto wallet. Yeah, we'll also look at that. That's quite an easy question. So let's firstly talk about Bitcoin, and then we'll move on to some fundamental analysis. Right, so those of you who were here last week, I know Joyce obviously was, but I mean, for those of you who were not here last week, we were discussing a little bit about the recent decline in the price of Bitcoin and the extent to which maybe it's going to complete and continue. And based on what we see on the chart now, or let's say, in my opinion, what's seen on the chart now, I think the likelihood or the probability of a significant push below 60,000 seems to be lower for a couple of reasons. Primarily because we had a fairly strong reaction on the 6th of February when we had that large down candlestick on the 5th to test 60,000. And so far, we haven't had any very obvious, to me anyway, evidence of volume or momentum that's pushing the price downwards. So I think it's possible for the price to settle into a range, maybe for an extended period around 60 to 70,000. And the support from that from technical analysis is pretty limited. The main thing really that I would just focus on is the relatively high volume and a relatively large size of this candlestick on the 6th of February. I mean, for saturation indicators, I know some people don't like them in general, but separately from the general, for crypto, saturation indicators are almost always going to be pretty useless because it doesn't really care about saturation. And the moving averages are, lagging, quite significantly, of course, in this case, whereas ATR is falling rather than rising. So that's one possibility. And I think another factor is just the size of these candlesticks. We can see for much of February so far, relatively speaking for Bitcoin on the daily chart, we have some pretty small candlesticks. We don't have any obvious desire for follow through here. So I think one possibility for looking at here is also considering the volume on futures, which recently has dropped off pretty sharply. And of course, that can indicate there's no buying volume. Yes, of course. Most of the time people are going to be buying a big, you would think anyway, for the price to go up, you want the people to be buying futures on Bitcoin. We don't have any evidence of that, but we also don't have any strong evidence, whether it's from Exness's platform or whether it's from other brokers, of like a significant uptick in selling volume. Selling volume dropped off after the 5th of February and hasn't really recovered since then. Then we have some evidence of significant buying volume around the 6th of February. But I suppose the caveat to that, which I know obviously I've talked about this in previous streams before, but don't remember having seen you, Caroline Gold, so I just want to stress it once again, is that for Exness and various other brokers of CFDs, around the end of September last year, we had a massive drop-off in terms of total volume, which has not really obviously recovered yet. Here we've moved up to the weekly chart, bear in mind, but we haven't had any obvious recovery in terms of a volume. And that, I think, from what I have seen anyway, I haven't checked all of them, but for what I have seen, that's generally borne out by many of the other brokers of CFDs. Okay, so in that situation, we're probably not really expecting the price to move very much further downwards. We're just not necessarily expecting it to recover that much either, because a couple of weeks ago, I think it might have been 2 weeks ago. I don't think it was last week. Oh yeah, it was last week. Yeah, wrong. Sorry, it was last week. We opened a position here. Remember, this is a demo account. It's not a live account. Opened a position on this demo account to sell Bitcoin. And so far, it's kind of chugged along a little bit, but hasn't really done anything much. Price hasn't really moved very much. So that's why, for the moment, it's maybe just not all that interesting to be trading Bitcoin. For it to do an obvious breakout from this possible range between about 60 and 70,000, then I think we probably need some kind of new fundamental catalyst. Does that come from the economic data this week? I personally think no. I don't think it comes from economic data this week. Maybe it does, but I don't think that seems to be terribly likely. But that's something we want to continue monitoring. So for the moment, I think it's a kind of wait and see approach, really, for Bitcoin, for me at least. I mean, it's a possibility, I think, to sell if you weren't already set. For me, at least, anyway, it would be a possibility to sell on my live account CFDs with a target maybe around 60,000-ish as possible. It's just we're not going to get a terribly great ratio by doing that. So I'm not really hugely mad on the idea. I think I might just actually close this trade with a moderate profit at some point. Bearing in mind, this is a demo account. It's not a live account. So hopefully that answers your question. We've talked a little bit about, but I'm sure we'll be talking more about Bitcoin later. But that's the kind of overview of what I think about Bitcoin, Caroline Gold. So thanks for the question and for your eagerness in asking the question, right? Hello, Mainsa Niama says, hello, Mainsa here from Zambia. Welcome, Mainsa. Thanks very much for joining us. That's great. Thapelo Taukubong says, morning, Michael, streaming from South Africa. Welcome, Thapelo. Thanks very much also for joining us. That's great. If you have any questions, anybody, please by all means ask them. We'll start to move on just to try to get some of the material covered. But if you have any questions, please drop them in the chat. We'll get to the questions throughout the session, and we'll also should be able to have plenty of time at the end to answer any questions. And if you're watching us on Facebook, I'm not monitoring the questions there. If you have a question, please come over to YouTube to ask the question, and in the future, if we get lots of questions on Facebook, we can see how we can monitor Facebook questions as well. It's just lots of things to monitor, so can't do all of them. So somebody asked, I'm not sure where it went, but somebody did ask about crypto deposit methods. The simple answer is you can find these through the personal area of Exness. You can find all the methods of deposit that you're eligible for. In some cases, you might not be eligible to deposit with crypto. It really depends on your account. It depends on your personal circumstances, what methods you have. It depends also on your region and various other things. But just to find a way you can deposit, bear in mind this is a demo account, so I can't make an actual deposit. You just click on deposit and you should be able to get all the methods there. It should be quite straightforward. And if something is confusing, you can go to the help center, which is get.exness.help. So if you go here, you can find loads of different articles about payments, lots of different information about the rules for deposits and withdrawals, and frequently asked questions. So that's quite helpful, I think, as a first port of call. And I would remind you also, you can read it in various different languages. Not in all of the major languages, no, but you can read it in a variety of different languages. If that's easier for you than reading it in English. Don't know where that one went, who asked that. Somebody probably did ask that. But anyway, right, so let's move on. Let's cover just a little bit of fundamental analysis, look at a few charts, and then in the meantime, please keep the questions coming. Should have plenty of time to cover all of them. So what have we had that's fairly major so far this week? First one was Japanese GDP, which came out very late on Sunday, early Monday morning in Japan. It was pretty negative compared with the consensus, but still not quite as bad as the previous one. So for the moment, no technical recession in Japan. Which is significant in some respects, in that probably, I think it's one of the contributing factors to the relative strength of the Nikkei 225 recently, and it might also have some contribution to the strength of the yen. We'll be discussing that in a little bit more detail later. I think the situation now for the yen is a lot more ambiguous than it had been around this time last week, but we'll be certainly discussing more about that later. So Japanese GDP is positive, but only slightly, pretty insipid, pretty close to stagnation. And the major release that we've had so far today has been the British job report. So that's quite a significant release in that unemployment for December has reached a new high. Not for this particular cycle, but it's reached a new quite significant high. And we've also had significantly higher claimant count change, and we've had significantly worse HMRC payroll change. HMRC payroll change, this one here, is basically the British equivalent of total non-farm in the USA. Very basically, in that it comes out for the previous month. Both of these do, whereas unemployment rate lags by a month. So it doesn't look great, that chart. Obviously, it looks like a pretty obvious trend of rising unemployment in Britain. And I think that's about the highest unemployment that we've had in 4 years, right? Yeah. It's the highest employment we've had in slightly more than 4 years. So that's possibly significant. It probably complicates matters for the Bank of England, makes things at least a little bit more difficult for them to figure out how are they going to balance inflation with rates. Because on this topic, and we can discuss a little bit more about British Job Report if you want, if you think that's relevant, we'll mention it later. But the other important factor that I wanted to talk about at least briefly was British inflation, which is coming up tomorrow. So in the context of this job report, which has been overall really quite negative, it's going to be interesting to see, is inflation actually going down as much as expected? And if it doesn't, then that makes the situation even more potentially difficult for the Bank of England. Because here we're looking at British rates. The last meeting, yes, at the beginning of this month, a bit less than 2 weeks ago, we had a much tighter split than expected between the votes to cut and the votes to hold. We'd been expecting probably 7 votes on the Monetary Policy Committee to hold rates. We actually only got 5, so it was only by 1 vote majority. So that strongly increased the probability of there being a cut next month. And that's something that had already seemed quite likely. It seemed quite likely there would be a cut in March. Just didn't seem in any sense guaranteed. Whereas now it seems to be pretty close to being guaranteed. No such thing as a guarantee with the central bank, of course, but pretty close to being guaranteed. So that's why I want to focus particularly this week on British inflation, the annual headline inflation, because if we get something significantly divergent from the consensus, and we know in this case that the consensus and the trading economics forecast agree, which is pretty rare, it gets something significantly divergent from 3%, we might see like quite large volatility, particularly on the chart of cable. And cable recently has been, like, I think, broadly ambiguous in many respects. And I mean, also there's the impact from British politics, which we don't need to get into in too much detail unless you want to, in which case we can certainly go into detail about that by all means. And then we're looking at the usual building permits, durable goods, and so on and so forth from the USA. Usually not super important releases for us as traders, but something that we want to watch. Japanese inflation in February is also quite an important one because this overall has a trend of coming down. It certainly seems like it peaked early last year and is in the process of coming down. So that makes it kind of more questionable, I think. Makes it more questionable to see, well, what is the Bank of Japan actually going to be doing? Are they going to be having a cycle of tightening? That seems, I think, increasingly unlikely. Certainly not impossible, just seems increasingly less likely, especially given that last time the figure for December, which was released around the end of last month, was much lower than the forecast had suggested. Forecast had suggested 2.7%. We only got 2.1, much lower than expected, for different reasons, which we don't need to get into. But the point is, it's significantly lower than expected. So let's just briefly look at some of the probabilities for the interest rate in Japan. Oh, we don't have any yet for next month. Okay, not from this only. But, I mean, it's something that seems kind of questionable. You know, what's Bank of Japan going to be doing next month? It seems to be, I think, at best questionable whether there's going to be another hike. It seems, based on this, quite unlikely. But we do want to monitor and see how is this release coming out. If we got a significant surprise last time, maybe we get another significant surprise this time. Might not be going down to 1.9%. But if it does, it certainly seems at least somewhat less likely that we're going to get a hike from the Bank of Japan. Personal consumption expenditures, personal income and spending on Friday from the USA. But the main event on Friday, I think, or let's say the main event that I am watching on Friday, is American GDP. Because we saw that in the previous quarter, these releases are all delayed due to the government shutdown, but in the previous quarter, which is the third quarter of 2025, way better than expected. Release was much better than expected. And for context, I'd been expecting, but I know I've said this a couple of times in previous streams, but indulge me for a second, I've been expecting that this would go down fairly significantly compared to the second quarter, given that we had this obvious slowdown in the American job market, starting from around May last year. Is that going to work? No, it is not. Yes. Okay, good. So we're starting from around May, June last year. In the revised data, we had really quite significant slowdown in the job market in the USA, which is more or less consistent. It wasn't consistent in the size, but it's consistently slower, let's say, than it had been in the beginning of 2025 and for most of 2024. And usually, I would expect that would have some significant impact on the employment aspect of GDP, but no. On the contrary, it's actually done a lot better. I mean, it's been driven, of course, to a great extent by consumer spending. It's been driven by balance of trade, by significantly higher exports, and, of course, significantly lower imports against the backdrop of tariffs. But that's something I think is a really important release to watch and see how much is it going to go down. It's very, very unlikely, of course, to get another 4.4% growth in this environment. But there's quite a large range of expectations. Between 3 and 3.5%, which is quite a significant fluctuation. So that's really key release this week. I think has significant potential to change things for gold, for the US dollar, and also for various other things. So we want to look a little bit at FedWatch and see how has that impacted other things. But before we come on to that, let's just look back and see what we have in the chat. Traffic Stop says, "Hi Michael, Ronald from Cape Town here. Wanted to know the imbalances on the charts. Do they always have to be filled, or can the market go upwards or downwards without returning to fill those gaps?" Yeah, good question. Thanks for the question, Ronald. The simple answer is no, they don't always have to be filled. Let me just see where we can find a reasonably good recent example of a gap. Not sure we're going to find it here. I mean, the most common thing, the most common situation for us as traders of CFDs is to find gaps on the charts of individual shares, and generally speaking. There's some exceptions to that. We could also find gaps for crude oil over the weekend, definitely. But if you're on an hourly or a 4-hour chart for an individual share, especially one that's not super well traded as a CFD, you can often find a gap. And the kind of instinctive assumption is this gap has to be closed. And that is, I think, the default assumption, yes, but you could find many exceptions to that. You find many situations where that doesn't happen. And I would stress this is just a rule of thumb, but oftentimes when you find that a gap is not closed within a couple of periods after it having appeared, especially a significant gap, then often that means that we might have some continuation of the direction of the gap. So in this case for Walmart, I think that it suggests you're not going to get any significant decline back into the range for Walmart anytime soon. Given that the gap, it's a relatively small gap, that's true, but given that the gap hasn't been closed. Whereas the default assumption of like assuming that a gap will be closed sooner or later, it can often work. Can we find a reasonably good example of that happening? I don't know whether we can find an example of that happening. It's not a fantastic example on the 4-hour chart, but I mean it's an example. So here we have a weekend gap for Nvidia, which is closed pretty much immediately in the next period. So if that happens, I mean, other things being equal, I would stress, Ronald, then we would often expect to see. We would often expect to see that the price will continue against the gap, and it will continue up above where it initially started. Just would stress, of course, Ronald, that is kind of a risky approach because there's loads of other different factors that are affecting the price. It's not just about gaps. There's the fundamentals, perhaps most obviously for individual shares, and we also have various other indicators and other tools and sentiment that we have at our disposal. So I would just stress it's a very rough rule of thumb that gap not being closed quickly often suggests that the direction of the gap is correct. Gap being closed quickly suggests the price might reverse in the opposite direction from the gap. But the simple answer to your question, Ronald, is no, they don't always have to be filled. Market can go upward or downward without returning to fill the gap. I mean, eventually it will return. It's just, in a position, you might not stay solvent for long enough for it to return. That's, I think, one of the important factors. But I don't think, just as I stress as my personal opinion, Ronald, it's not something to rely on too much. I don't think it's a good idea to rely on this too much. I think it's a great idea, wherever possible, to use a range, preferably a wide range of different sources to find signals. And of course, for some people it works well to trade these relatively lesser traded individual shares like Walmart. Of course, is a very highly traded share in general, just not so much as a CFD. If you have an edge to trade this, that's great, but otherwise it's not something really that I'm super mad on trading as a CFD anyway. Maybe tech shares, in some cases, they might be kind of preferable for that. I would stress just my opinion. So hopefully that answers your question to some degree, Ronald, and thanks very much for the question. It's a good, interesting question to discuss. Samar FX says hello. Hello, Samar. Balwinder Singh says hello. Hello, Balwinder. Thanks for joining us. Good to have you on board. And then Joyce asks, what could be the reason of the mixed fundamental backdrop on the gold dollar pair? I don't think that necessarily we have a mixed fundamental backdrop. It depends what you mean by that. So if we look here at the chart of gold, I suppose that there was kind of a shock period, like there's a few days of shock around the very end of last month very beginning of this month. That's true, yeah. But I don't think that anything actually really significantly changed in terms of fundamentals. In that what we were just discussing a few minutes ago about American growth and American jobs, I think has not really changed very significantly recently. Well, I mean, I suppose it kind of has with the latest NFP, but it was too early to tell whether that's a trend. And the last time we really had a significant change in terms of FedWatch, which we'll come back to talk about that more in a minute or two, was end of last year. So I don't really think the fundamental backdrop has changed very much. This is just my opinion, right? I think what has changed is people just looking for an excuse to get out after a candlestick like that, and coming towards a kind of saturation point, a mature point in such a long uptrend. Lots of people are looking for an excuse to get out. So, I mean, that kind of panic that might occur in that situation, we need to go really far back to find where you think the start of this trend is. I would argue probably started, the overall uptrend on the weekly chart I'm talking about, probably would have started about 2.5 years ago approximately, in October 23. Depends on how you want to measure it, but the point is it's a very long uptrend, right? And we have massive candlestick from the 28th of January upward. So lots of people looking for a way to get out in that situation. And the announcement, as we discussed, the nomination rather of Kevin Walsh as the next chair of the Fed by Donald Trump, and that's something that could panic people without them really thinking about what it means, since it doesn't necessarily really change the outlook for the Fed for the rest of the year. I would argue maybe it doesn't really change the outlook for the Fed, that in itself, for the rest of the year at all, since lots of hurdles towards his nomination and no guarantee by any means he's going to be Trump's stooge and he's just going to cut the rates. So I would say I don't really think that there is a mixed fundamental backdrop. It's just my opinion. I don't think the fundamentals have really changed a lot in the overall sense. I just think this is a kind of normal situation when we have this like sudden surge in volatility, like you have this like massively high ATR, highest it's ever been for gold. Then it's kind of normal situation for everybody to say, okay, let's take a break from this for a little while, and then let's come back later once everything calms down a little bit and direction comes a bit clearer, which is, I think, understandable. Usually we see that for many instruments after this kind of movement, we see that volatility needs to shake down a little bit. And once it does do that, then we might start to see more volume returning. We might start to see a clearer direction. So it's just my opinion, Joyce. Hopefully that answers your question to some degree. And then let's do another question and let's talk about FedWatch. So, hi Michael, Emmanuel from Ghana. Wanted to know your takes on gold based on current technical and future fundamentals for the month. Yeah, let's talk a little bit more about gold. Well, as I was just saying, in response to Joyce's question, I don't think fundamentals have actually really changed. And we can talk a little bit more about the different aspects of that later. I'm just a bit mindful of the time. Whereas technically speaking, it's just very difficult to find an entry here with a reasonably good ratio, especially considering if you were a swing trader, a position trader, and you want to set the stop in an appropriate kind of technical area, you also have to bear in mind how does that relate to ATR. Since if you set your stop within the ATR for that time frame you're trading on, then usually that pretty much guarantees the stop is going to be triggered within the next 2 to 3 periods. This is an exception because ATR is so high and it hasn't really factored in yet. It hasn't really factored in what is going on here, since relatively speaking it's calmed down. Obviously, relatively speaking, it's calmed down. But, relatively speaking, it's calmed down quite significantly compared to the peak of volatility around the end of January. So my starting assumption, stress is just my opinion, Emmanuel. My starting assumption is that there's no evidence that the uptrend is over, and I don't personally think that the fundamentals have changed very significantly. So if I was going to be making a trade for gold CFDs from here, I would certainly be thinking more about buying than selling. The main challenge for me to do that would be how am I going to find a reasonably good ratio to trade this? That is something I really don't know how I'm going to do that. One potential option, although I would stress is not a very reliable placement for the stop, one potential option would be to use a pending order, to use a buy limit lower, maybe around 4,700-ish, and then that's inside the tail of this period from the 2nd of February. and then set the stop somewhere also within that tail. That's one potential option on this time frame on the daily chart. Where would you set the target? I don't know, maybe all the way up here, 5,500 and something. Let's try it and see what ratio we get. Remember, not a recommendation to trade. This is just it's just meant to be informational purposes only about how I might approach this if I was to be trading it now, right? So we could probably set the stop maybe around 4,500, which is, I mean, obviously ATR wise, that's not by any means awesome. And oh boy, you can't really do that on this account. Yes, obviously, but let's imagine that I do have to. Then I mean, that's one approach, right? Because I just think it's really on this particular time frame, it's really quite hard to find a reasonably decent ratio. If you were trading the hourly charts, then I think it would have to be, or I would have to be, let's say, significantly less aggressive about it than that. So I'd probably, on the hourly chart, I would probably look from a stop around 4,850. Let's try that and see what it does. 4,850, and then the target would be, of course, significantly less aggressive, maybe around 5,100 or perhaps slightly below that, since that looks like a possible short-term resistance. Sorry, I've got these the wrong way around. 4,850. 4,850. And again, on this account, I mean, not a great idea to do it on account of this size. If this was a live account, it's not. It's a demo account. If it was a live account, I certainly would not be doing that on this account. But I mean, there's one approach potentially that might work, since they're beyond the latest low on this particular time frame on the hourly chart. And I mean, if we're wrong about the direction, which is certainly quite possible, then it's not like the whole account pretty much that's lost. It's a slightly smaller proportion of the account that's lost. And I mean, it's not like a very unreasonably aggressive target compared to that pending order that we had from before. Some of these I think we can probably get rid of, but we can talk about that in more detail later. So that's my take. I mean, I just think, like, what are many of the large participants in gold doing? What do I think they're doing? You know, I think that they are putting their feet up. I think they're having a cup of tea, and I think they are not trading this right now in general. Or they're sticking to any deliverable or custodial positions that they have. I'm certainly not going to be entering new CFD positions for this right now, because that's conventional wisdom. Usually conventional wisdom is conventional for a reason, in that it generally works. We want the volatility to decrease. We want to see ATR going down. We want to start seeing more of a clear direction. We want this to becoming a bit more of a distant memory. Just to try to de-risk the position somewhat, make it a lot easier to find a reasonably good ratio of risk to reward, and generally just reduce the psychological kind of nervousness associated with it. Because if this is a recent memory, I would imagine many traders are expecting, oh, what happens if this happens again soon? And it might. So you just don't really want to be entering a trade with, or let's say I don't want to be entering a trade with that kind of hanging over my head like a dark cloud. But those are some potential options for if we really need to find a trade right now. I personally would not want to do that. But if we really need to find a trade right now, those are some potential ways of doing that. And of course, you could scalp on a very low time frame, which actually right now I think is possibly the least bad of a bad bunch. In that, relatively speaking, for scalpers, the volatility is actually pretty low right now. Relatively speaking, the volatility is not that high. So, you know, finding the significant new areas on the higher time frames and trading the reactions to them. Like next time we get a low, we get like a significant new low on the 5-minute chart, which I've stressed, of course, is a low time frame. Then we can potentially think about buying the reaction to that, assuming that there's no obvious fundamental reason for or news-based reason for the price to move down like that. It's one perfectly good option. Depends on the amount of time you have, depends on your strategy and the various different things. You know, this is just what might work for me, doesn't necessarily work for you, Emmanuel, or anybody else. And thanks very much, Emmanuel, for the question. Right. So let's take a quick look now at FedWatch, and then we'll also look at a few other charts. In the meantime, please do keep the questions coming. Thanks very much for the questions so far. That's great. Interesting questions to discuss. So please keep them coming if you've got more questions. So as we summarized a little bit earlier, the last time we had a really significant change on FedWatch, the balance of probabilities for rates in the USA, was around the end of last year. It was a little bit before Christmas. We had the shift from majority expecting at least one cut by April, so about 2 and a bit months from now, give or take, back to June. And since then, we haven't had any very significant changes in expectations for this. Seems to be like certainly pretty much guaranteed that we're going to get another hold next month. I mean, obviously, as I say, there's no such thing as an actual guarantee when it comes to central banks, but it's close to guaranteed. It's practically certain. 90% probability of a hold. The Fed doesn't want to surprise markets. And in April, it also seems to be very, very likely, more than 70% chance that we're going to get another hold. And then when we come to June, then that's the first flip. Approximately 68-70% chance of at least one cut. Low chance of 2 cuts by then, or a double cut. Seems very unlikely. And still, by the end of the year, we have a pretty high probability. That's to the tune of about 80%, right? Yeah, about 80% probability that we have at least 2 cuts by the end of the year. I would stress, obviously, that this is quite speculative. If we look all the way ahead at December, then we can expect that this is going to change a lot over the next few months, depending upon what the Fed actually does and its next few meetings, of course. But, I mean, this is what we can see now, so we can kind of plan on this basis. And that hasn't really changed all that much. You know, if we get in the next meeting of the Fed in March, we'll be talking about that a lot over the next few weeks, of course, in this live stream and elsewhere. So hope you're excited for that. If we get at the next meeting some kind of clearer signal as to, the job market is looking stronger, we might have to postpone the cuts. Or, growth is looking really great and we're happy about the growth, which I think is certainly quite possible given the recent numbers, then we might start to see these expectations shift further back, possibly to July, maybe even to September, since that's kind of the default that we've expected for the Fed, shifting back the expectations, not bringing forward the expectations for cuts. Over the last few years, that's been like the normal situation, basically. We might see that happening, but that depends, I think, to a great extent on how does GDP actually turn out, and to a lesser extent on how does PC turn out. Since PC is the Fed's preferred measure for inflation, differs from regular CPI in various respects. So it is important to see what PC comes out with. It's just usually not going to be like radically different in direction from inflation, from headline inflation. Some exceptions to that, but as a general rule, it won't be radically different in terms of the direction. Although the actual numbers and per month, you might expect more volatility, certainly from regular consumer price index. So I think those are some of the most important releases we've got this week. I mean, my focus primarily is on GDP, American GDP, also looking, though, at Japanese inflation and looking particularly at British inflation tomorrow in the context of really quite a weak job report. So if you want to talk a little bit more about any of these aspects, you want to talk a bit more about any of the calendar stuff or fundamental stuff, news stuff, any of this stuff, please by all means ask a question. We can certainly talk about that. Not a problem. We can cover pretty much whatever you want. So let's look at a few charts, right? And then also if you have any questions about specific instruments you want to be covered, then by all means go ahead. If you have any general questions as well, you're welcome to ask them. Should have plenty of time to answer all of your questions, I hope. Within reason, So let's look first at dollar yen, since we mentioned that briefly earlier. In that that's had a pretty bad run last week. You could say overall dollar yen did not do well last week, since we had very clear results from the Japanese election, and it seems like mostly participants are not very spooked about the likely fiscal policies of the government, and it's a pretty strong government, relative to what's normal in Japan. Can we get that chart up? We can get the chart up later if somebody wants it, but you don't need to get too deep into politics, right? But it certainly looks like on the daily chart, at least, it's reached a double bottom. Waiting for confirmation of that from the next couple of periods to see, is it going to move down? Is it possibly going to test lower? Maybe it's actually like a full-on test of the 200 SMA. Let's see what happens with upcoming American and Japanese data. But I mean, broadly, I would say the direction is not very clear, and it might move sideways for a little while. Because I've been talking for a little while, or actually quite a while, about 160-ish dollar yen is the area where we expect much more intense verbal intervention, at least from the Bank of Japan and possibly from the government as well. since they focus on this, they want to focus on imports as well as exports. And I mean, it's pretty close, dollar yen, to multi-year highs. In the grand scheme of things, we haven't really seen a big decline. It just looks relatively big decline on this particular time frame. So I think it's a little bit difficult to find a position here. I mean, you could say the trend is your friend, and you could say let's buy and let's look for another swing high around 157-ish. It's possible, yes, and we get a reasonably good ratio from that. Just I think we should bear in mind we might get like more or less wipeout if it does actually push significantly below here. So that's one question. I mean, if we say the 200 SMA, let's maybe set the stop a little bit below there, maybe around 151.50. So let's try it. Remember, demo account, informational purposes only, not a recommendation to trade. And then the target in this case is probably set around 157. So we can get a pretty good ratio here. That's actually quite an awesome ratio, I would say. It's absolutely okay. It's a little bit better than 1 to 3. It's just, I think, kind of speculative, given the volume of data this week's pretty important, especially American GDP on Friday, but also Japanese inflation might come up with quite a surprising result. So, it's better, in my view, to wait until after the data and see. That makes things a little bit clearer. I realise you hear me saying that a lot in the stream, but it's just my opinion. I think it's better to be safe-ish than extremely sorry. You never, of course, be totally safe trading CFDs, but you could be safe-ish rather than sorry. And for Eurodollar, I think at the moment, the direction, again, I think seems more likely to be upward. Based on a kind of instinct and feeling, seeing how it's moved recently. There's obviously been significantly more demand and overall volume of buying. And there hasn't been a very strong, ongoing reaction to when new high was reached around 120-ish. But the main problem here is that 120 is likely to be a very strong psychological area. I mean, it's a nice round number. And of course, remember from way back in the day, before COVID, 120 was quite a familiar area where people were talking about quite extensively. I think it's kind of questionable to see a lot of follow through without some kind of strong fundamental narrative above 120-ish. So I mean, certainly Eurodollar is not a preferred instrument. It's not a preferred pair for many swing and position traders in the first place. But right now, I think particularly it's not an ideal one. And also, same caveat that I was saying before about the American data. And I would argue same caveat too about German sentiment. That's coming very soon, actually. German data is coming out in only about 15 minutes. So it'd be interesting to see what happens there. But I mean, scalping German sentiment is not a fantastic option for various different reasons, in my opinion. So let's look also at cable. Where is it? It's here. That's reacted pretty much as expected. I mean, let's take a bit of a lower time frame than this. It's reacted pretty strongly negatively to the British job report, which you would expect is a pretty negative job report, as we discussed earlier. We can look at more detail about that later. But so far, recovery has been seems to have been more or less strong, in that right now we don't have so much political intrigue in Britain. It's lower than it was last week, at least we can say, certainly. And overall, the narrative of the declining dollar and lower independence of the Fed and so on and so forth seems to be persisting. I think the key thing to monitor for this, and the main reason that I would not trade it right now, is we've got British inflation coming out tomorrow. So I certainly don't want to get into any position for this to be held over the period of inflation. I want to see what the actual result is from inflation, try to react reasonably quickly to it. That suits me based on my time zone. Since it does look very likely that it's going to go down when you have weaker job data, then you almost always expect that inflation is going to go down unless something really weird is happening, because consumer spending is going to be at least somewhat lower, so lower demand. But I think always best, in my view, to wait for the actual release and then see what happens. So GMT +2, it's going to be at 9 in the morning. I'm interested to see what actually happens there and possibly to trade it. Because based on my, kind of default assumption, it's going to go down. It might go down significantly. We might have a chance to sell in here. It might be a reasonably good opportunity to sell it. But just wouldn't desperately want to do that now. Prefer to wait until we get the actual release of inflation. I don't have any overbought or oversold. I think personally for a forex pair like this, that can actually be a very good guide as to when it's too risky and when it's not necessarily too risky to look at overbought and oversold. Slightly closer to neutral than oversold. So no obvious signal from saturation. Question of can it actually break through the 50 SMA from Bollinger Bands? Let's see, depends on the data, I think. But the direction, in my opinion at least, the direction for now is most likely to be downward. So we're probably looking for sells by default unless we see significantly higher inflation than the consensus. And also depends on what's the reaction actually going to be to these data. If you have any more questions, anybody in the meantime, please by all means ask. That would be great. So Bitcoin we looked at in a reasonable amount of detail before, but if you want to talk a bit more about the specific aspect of Bitcoin, by all means go ahead. Crude oil as well has been definitely more interesting recently. We still haven't got to that target that we put in the trade of the week a few weeks ago, but I think there's a reasonable possibility of getting there. Maybe that declines as time goes on. But what am I basing that on? Overall, we've had quite high volume of buying. We've had more or less stable production from many of the major producers recently. We haven't had any obvious signs of very significant economic headwinds in the USA, at least. So the outlook for demand might get slightly worse, but I'm not sure whether we're going to get significantly worse outlook for demand in the near future. That's just kind of an overall top level summary, really, of it. So let's see. I certainly think that on this time frame, on the daily chart, zoomed in that far, we still probably have an incipient uptrend. We can only really count one obvious new high, so we can't really call that a trend yet. I think we probably need to find 3 new highs or lows to be able to consider it a trend. Whereas if we look at lower time frames, let's take the 4-hour chart, then I think it's pretty clear that we have the beginnings of an uptrend. It's just a question of fundamentals and what's going on in terms of demand primarily. How are we interpreting various data from China, especially imports and GDP? In the overall, I think you can say, as a kind of high-level summary, again, not diving deep into the fundamentals, Chinese economy is looking a lot better than had been expected around the beginning of last year. So that's obviously positive for demand for oil in most situations. But again, it's something to watch, analyse the regular stock data as usual. I just think right now for this week, probably pairs with the pound are going to be more interesting and to monitor, but not necessarily actually to do something about. Gold is probably going to be more interesting for this week. But still definitely want to monitor oil and see how that's moving in the next few days. So Access Man says, great, thumbs up. Nice to see a thumbs up. If anybody has a question, then by all means, please ask a question. That would be awesome. So I think we're kind of coming towards the end of the regular time. Oopsies. Why have I clicked that? Sorry. We're coming to the end of the regular time. If you have any questions, please by all means ask. But at this stage, I also want to talk to you briefly about, if you missed the start of the stream, you can watch on YouTube. You can watch the whole thing from the beginning on YouTube under Exness's channel. And you could also check out our podcasts, both Born to Trade, we can see Kojo quite regularly, and Trading Talks, where you can see some of us from Trading Content Team. And under live, when will Kojo be back again? I don't know, I'm afraid. I don't know when Kojo is going to be back again. I know a lot of people like Kojo's stream. Kojo does do a very good stream. I don't know when he's going to be back. He usually does it on Wednesdays. Hopefully be back either this week or next week. But I'm afraid I can't give you a firm answer there. I'm not responsible for Kojo's schedule, obviously. But if you are subscribed and you have notifications on, maybe don't turn them all on, but if you have at least personalized notifications on, then you should be notified 10 minutes before Kojo starts the stream, and you can join in for the stream. Yeah. And I mean, of course, if you can see an obvious way for us to improve this stream that we're doing right now, leave us some feedback. Leave us some comments or feedback suggestions. That would be great. And you can also check out the trade of the week, new trade of the week coming up tomorrow. Currently, the rate is doing quite well, 77% over the last year, so that's fantastic. Bear in mind that will change. It's not a signal, it's not a guarantee of success. It will change, just, nice when we get it right for a while. And as well as YouTube, you can also follow us individually. The trading content specialist, you could follow us individually on X. So this is me, I'm at Exness. And you can also check out some of my colleagues who are the strategists, market strategists, including Eric and various others in here. Maybe it's easy to go to followers. Trading trainers too. Heikel, you can follow Tomislav at Trading Trainers. And there is my immediate colleagues, Andreas, who is Andreas Them, and also Stanislav, who is somewhere around here. Yes, here he is, yeah, at Bernehof. So yeah, please do follow us on X. We share like various charts, ideas, feedback, commentary, like other stuff. Analysis is a good way to be notified of something interesting new that's been published. And of course, follow us, subscribe to us, turn on personalized at least notifications on YouTube, and hopefully you can get something out of that, various different material here, which is quite useful. And since we still have time, there's no questions, let's also plug Exness Insights. Exness Insights, great place to go if you want to know like lots more detail about a specific topic. Because if we're looking here, this is Andreas' article about moving average convergence divergence. Gives you lots of information about what the indicator is, how is it calculated, what can you do with it, and here's Chris's outlook for cryptocurrencies in 2026. And it's interesting to read this. I would just stress, obviously, everything that you see here is one person's opinion. It's not like a guarantee. It's not. It's not a fact or a law necessarily. It's based on facts, but it's somebody's opinion, and you can think about it and see, does it make sense? Is there something that you can actually use? So Exness Insights thinks very good source for all sorts of info like that. So I think that's about it. Those are the main things that we want to cover in the stream. So I would just say we do have a few minutes left. If anybody has any further questions, anything you want to analyze, any general questions, then that would be great. Since if you ask a question, then of course that makes the experience more interactive and interesting, possibly. Certainly makes it more interesting for me. And hopefully it makes it more interactive, interesting and useful for you as well. Yeah, so in that case, if there's no questions for the moment then next week we will not have any stream, or at least I will not be streaming and Andreas will still be away. Hopefully Coach will be back soonish. But the week after that, we should be back to doing the stream as normal. So that should be, I think, first week of March. We should be back to the stream as normal. Let me check. So yeah, not on the 24th next week. We should be back as usual on the 3rd. Hopefully Coach will be back soon, but I can't guarantee that. And just want to wish appropriate greetings of the season to everybody, since Roman Catholics will begin Lent tomorrow. Ramadan for Muslim brothers and sisters will begin either tomorrow or Thursday, and Great Lent, of course, for Eastern Orthodox, Oriental Orthodox next week. So everybody will start fasting within the next 2 weeks. Wish you pure fast, delicious breaking, and hopefully have a holy season of fasting. And thanks very much for joining the stream. If there's no questions, I think we're just about done. So hopefully see you next week. And if you're trading the GDP release, just remember, try to manage risk. Try to keep position sizes sensible, and wish you successful, responsible trading, and see you again after 2 weeks, God willing. Thank you for joining. Thanks for all the interesting questions.